Yeah, hello and welcome to another update video about Polygon MATIC. So with MATIC, I am now taking off the WXY XZ structure from the chart because, as I told you before, if we break above the previous wave X high, even if it was only briefly, but it was for me strong enough to consider that, and it makes it now more likely to consider the blue count, right? So what we do, we go back to the original anticipation and we say that the low of the wave 2 was in here in the reversal area there, yeah. And by the way, you know, anybody who followed here the analysis knows that the last entry point I gave, I mean I'm never telling you when to buy, but the last trend reversal point that I gave was this one, and we did reverse, yeah. And this was again one of these examples where I say the Elliott Wave analysis allows us to find and identify support levels that we can buy with relatively low risk compared to the possible reward, and this was one of them, yeah. So this was down here at 69 cents. This was the time for me to go long. And then, you know, we have made quite a nice move up. It's not that, you know, for me, it's not attractive to buy now because we are far away from support. Of course, you know, if you're a breakout trader, you would have bought this breakout, which might work out as well. It's just the risk is just much higher compared to the reward, right? Because the reward is essentially only that B wave. But for me, you know, the idea is now, due to that break, that it was probably not a WXY-XZ, which I communicated was a very rare pattern anyway, but it can happen. So it was probably only just an ABC or WXY. Can become both ways. I leave it at the original ABC. And this is then a diagonal pattern to the upside. So I did highlight that on the chart here before and said it will get quite likely if we break above the 94, 95 level, also the previous wave B high. We did break it. I can consider that now as, yeah, complete wave 3. Next we should see this wave 4 down and then a wave 5 up, and support for this fourth wave. No, let me just see that. Yeah, okay, support for this wave, where would it be? There's different ways of counting this. To be honest, I would rather, just thinking, because this could as well be, if this is a 5-wave diagonal, okay, let's leave it as it is. Support for this fourth wave, right, let's calculate it. So, support area for the fourth. Take the length of the third wave and we look at the retracements. As you can see, we've already reached the 91 cent level. So the 91 cent level is here the 23.6 retracement. That's the minimum it needs to do, so it's already reached that. The ideal level would be the 87 cent level and the maximum the 84. So I wouldn't be surprised to see 87 cents. That would mean we get back into the wedge and then fulfill the fifth wave. Again, I told you I will not confirm this pattern. It's getting more likely now, but I will not confirm this pattern until I see all 5 waves complete. That is because this move up is not clearly impulsive. It is at best a diagonal pattern, and these are not very reliable. So what I want to see, I want to see 5 waves complete. At the moment I have only 3, and this could theoretically still be just a WXY or whatever, or, you know, a corrective move up which would come down. So I want to see 5 waves complete. The train isn't going to go to the moon, or the train is not going to the moon anyway, but the rocket isn't going to the moon without us, without another retracement possibility, because what we would expect is that this will be a 5-wave move up and there will be another correction afterwards. So what I will do personally, I will wait for those 5 to fill. If we get 5 filled, then it would be a confirmation that we are really back in an uptrend here, yeah, that this was indeed a sustainable turning point. And I will then wait for the retracement, yeah. So that's how my strategy, and then I would buy in. So at the moment, this target area here is getting less likely. I take it out now from the chart, it only confuses. And next resistance, if we push now above the 96 cent level, which is the previous swing high, next target should be in the region around $1, $1.05. $1 is a very psychological level anyway. $1, $1.05. The $1.05 level is the previous wave one high. And really only if we get above $1.05. So what I think will happen in the best case here is 5 waves up, 3 waves down, and then in the next move up, we're going to break above $1.05. This is only then we can really confirm that a low was in. We can't confirm it before. We can say there are indications, we can say it's looking likely, but we can't really confirm it until that wave one is broken in the next high after the next retracement. So it's looking good at the moment. Target for wave 5, I mean, I would say, as I said, $1, $1.05 level is very realistic. Don't think that in this 5-wave structure we get above that. Yeah. And the level that we need to hold now is this swing low. So we absolutely need in any retracement now to hold the 77-cent level. This swing low, taking that out would not be good. And I mean, looking at the fib levels, we should actually hold the 84-cent level. That would be, 84. Below that level, it will already get very unlikely, that this is still a wave 4. So that's my view about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.